Hello everyone, this is Mark Lynn with Healthcare Business Specialist in Chattanooga, Tennessee. This is a recording of the Provider Relief Funds and Cost Reporting Update for RHCs by Healthcare Business Specialist. This was originally presented on November the 20th, 2020 at noon Central Time. However, the recording did not go through, so on Saturday, November 21st, I am re-recording this session so that for those that missed it, will be able to listen to it. My name is Mark Lynn. I'm a CPA from Chattanooga. We worked with the Rural Health Clinic program for probably close to 35 years. Now, here is my contact information. Danny Gilbert is with us as well. She hasn't worked with the Rural Health Clinic program for 35 years, but she's been with us for on and off for a good almost 10 years now, and is the brains of this operation. So if you need to get a hold of Danny, there is her information as well. We do want to thank our sponsors, Azalea and ChartSpan. They make it so that we can provide these webinars and seminars for you guys at no charge. And we will be back doing full day seminars eventually as soon as COVID gets under control. Hopefully we'll get back to see you guys live in the future. What we do is we prepare about 200 independent RHC cost reports every year. Program evaluations for rural health clinics. We're now doing virtual program evaluations if you need help getting that done. Those are done every 2 years. If you want to become a new rural health clinic, we do RHC startup services, and we also do emergency preparedness for RHC. So if the state comes in, you have a condition level deficiency on emergency preparedness that you have to get fixed very quickly. We tend to do a lot of that. If you're in Tennessee and you do, you have to fill out one of those TennCare quarterly reports where you have to look through all the visits and count all the money, and it's really very tedious and time consuming. Danny does about 14 or 15 of those every quarter as well. So it does a great job with that. If you are not a member of our Facebook group yet, we have about 2,000 members at this time. So it is I think it's working really well. A lot of people get great information there. Patty Harper, Charles James, a lot of people were contributing, Julie Quinn, everybody's contributing to this and getting great information out there. And so we appreciate everybody working together to help the rural health clinic community. Disclaimer, everything was up to date as of November the 20th, 2020, as far as I know. This stuff, it's a moving target. You think you know it, and then next thing you know, that there's something out there that you missed. So we're trying to keep up with it. Here is all the links to the information from today's webinar. So you can, these are hot links. If you just go to ruralhealthclinic.com COVID-19, you will see this same information here. And if you click into these links, you'll be able to pull up the PowerPoint presentation from today, or these tools that we will talk about as we go through this session. You're not going to be able to ask questions because you're not here. Here is our agenda. Mandatory RHC COVID-19 lab reporting requirements. Just a reminder there, we'll spend 2 minutes on that. We'll spend about 35 or 40 minutes on updated guidance on provider relief fund reporting. And we'll spend the last 5 minutes very quickly going over cost reporting. I sort of bit off more than I could chew as far as time goes. So what I did was schedule another webinar for just cost reporting. So that will be a full hour on cost reporting. So don't feel like we cheated you on your cost reporting. We're going to give you that session in December as well. So the first agenda item was mandatory RHC COVID-19 lab reporting requirements. And the National Association of Rural Health Clinics put together a portal. They were hired by HRSA or HHS to do this for them, and so they've done a great job in making this as easy as possible. Nathan and Bill put together a webinar teaching you how to do this back in October. So if you haven't seen that yet and you haven't reported yet, and there's still a few of you that have not reported yet, go ahead and look at that. We put together a very quick Excel spreadsheet that you can get the information ahead of time. So when you go in the portal, you'll have everything you need. But you can see it's very, very easy the amount of information you need. Basically, you need the total number of shots that you gave, the total number of COVID tests that you did in a month, and the number of positive results by month. And then here is the website that you go to, RHC COVID reporting.com. So very, very easy process. Do remember that you don't do this just once. You do this every month. So once you've reported everything, got everything up to date, then the next month you're going to have to report your November. By December 31st, you have to report your November information to this website as well. It's going to be very helpful. The government wants to know how they gave out $225 million. They gave each of us $49,461.52 each, and they want to know what happened to their $49,400 and whatever that number was. Their 50 grand that they sent you, they want to know what they got for that 50 grand. And Shannon Chambers and Mark Spigman gave a webinar, I guess, last week on this particular issue. And so this shows how the folks in Kentucky are doing. As of 10/21, only 49 had reported at that time. And by the time we get to 11/9, you can see 212 of the 267 RHCs had reported. So only 55 had still not reported, but those 55 need to get reported, get in there and report this, as well as all the other RHCs out there. If you haven't reported yet, you need to make sure that you're doing that. Here is the heart of what we're going to talk about today, the general distribution. And yes, I immediately regret deciding to do this webinar after reading for 3 days all the materials and all the conflicting information and trying to digest it. It was, you know, if you think this is going to be torture listening to this 30-40 minutes, you should have been around here the last 2 or 3 days, because the problem is there's way too many chefs in the kitchen. You've got HHS that says one thing one day, and a lot of their information is conflicting. If you see an FAQ that's dated early on, it will not have the same answer as an FAQ dated later. The October 28th FAQ will be different. So you're shooting at a moving target. CMS has their own set of FAQs and rules and stuff that you have to deal with. The IRS is coming out with information about taxability and all, so you're dealing with them. And then the NARHC is involved as well with this COVID-19 testing portal, which I wish HHS, CMS, and IRS was as clear and as easy to deal with as the NARHC on this reporting. And again, the NARHC COVID testing is a mandatory thing as well. So it has the weight of HHS and HRSA behind it as well. So a lot of these don't agree, and a lot of times their guidance conflicts with each other, which makes it very confusing for us. And again, there's a lot of moving parts as well. Besides the multi-agency, you have terms and conditions that when you initially got this money, even though you didn't ask for it, you got this money, you had to attest that you were going to meet certain terms and conditions, and most of us have done that. Then there's these reporting requirements, these 6 pages of rules that keep changing. The hundreds of pages of FAQs that come out. There's 56 pages of FAQs from HHS about these reporting funds, and CMS has 150 pages of information about COVID-19 and about all the different waivers and how cost reporting will be handled and all this stuff as well. So it's very confusing. And then when you finally get ready to enter all this information, then you have to deal with these portals, and these portals can be very annoying. You have to enter in access codes you enter about 3 things of information, and then they're like, now to get to the next stage of the portal, you have to get an access code to go there. And so I know I've had to fill this out for a couple of our clients, and you have to have them just sitting by the phone saying, I need an access code. I need an access code to get through it. So the guidance is ever changing. Sometimes it's inconsistent. Sometimes it's always maddening, let me tell you, from what I have seen so far. Here is just a summary of the information what will be in these reports. First off, they give you just some basic guidance on how to use the funds. Then in the portal, you're going to be giving them some demographic information. I'm ABC Rural Health Clinic. I'm in Main Street in Anytown, Tennessee. You got to give some demographic information. You put maybe, I think you put your CCN number in as well. After that, you're going to tell them what your expenses are. And if you have less than $500,000 worth of expenses, you're going to give them summary. I'm sorry, if you received less than $500,000 worth of provider relief funds, you're going to give them general and administrative expenses and healthcare related expenses in summary format. You don't have to give them detailed. If you receive more than $500,000 worth of provider relief funds, then you're gonna have to give detailed information to them. So that is a big difference. Most of our RHCs will be under that $500,000, and we just have to give them summary information by quarter. But the problem is it's got to be by quarter. So you're going to have to do a little bit of digging on your expense reports and figuring this out by quarter. It's going to be a pain. And then lost revenues attributable to COVID-19. That is a ever-changing number on how they compute that, what goes into that number. They first came out saying we could use budgeted numbers, and then they changed that on September the 19th. On September the 19th, they came out with instructions that said lost revenue was basically limited to your margin. So if your margin was your net operating margin, and then if you made more money in 2020 than you did in 2019, you were going to have to pay back that excess money to HHS. And then finally, they want all these statistics. They want things like your number of FTEs by quarter. They want your visits by quarter. They want your number of telehealth visits by quarter. So they're asking for a ton of information. And here's where these two web links is where we got this information from. And going into the web to see what this information looks like. If you Google provider relief funds, you're going to get something that looks like this first page here. And since you're interested in being a provider, you're going to go into the provider link here. So click there, and once you click there, you're going to see something that looks like this, and you'll go over here to where it says reporting and auditing. That is where this information is. It's not the phase 3 general distribution where they're actually going to be distributing some more money to people coming up relatively soon. I think that was due November the 6th. So you already passed the deadline for applying for more money. But we're going to go into reporting and auditing. And we go into reporting and auditing, and here's what this looks like. This is where they're giving us the information on what we need to submit and when we need to submit it. Notice they put final reporting data elements right here. That's not going to be the final one. They're going to make some more changes to this. They've already told us that. So we'll go through and look at this as we go through. This is an infographic that summarizes the information very quickly. So that is a good place to start if you don't know anything about it. That infographic really is very helpful. So let's go into the win. The win of everything is, and hopefully HHS will get this done. They have very tight deadlines as well. January 15th, 2021, the portal will open for you to report your spending of these funds. So what you want to do is go in on January the 15th, start looking at the portal and trying to figure it out and see what information you need. Hopefully by then they will have a paper where you can print out the information that you're going to need to enter, so you can go ahead and work on that ahead of time. And so February 15th, 2021 that's when you have to have this information entered into the portal and have it accepted. That's not very long when you think about it. Think about what you're doing in January. You're doing 1099s, you're doing W-2s, you're doing 941 reports, you're doing all the year-end tax stuff that you're doing. And on top of this, you're going to be adding this report that is broken down by quarter for 2 years. You're going to be comparing 2020 to 2019. You're going to be bunching information by quarter for 8 different quarters and comparing them to each other. I mean, I don't know if it's going to be an accountant's nightmare or an accountant's dream if you're because it's going to be a lot of work. So so what happened? The good news is you don't have to have all of your provider relief funds spent by 12/31. If you did what we told people to do was set it up in a separate bank account, and you put in, maybe you got that $103,000 back in May for the RHC distribution there that all RHC's got. If you're a pediatric office with no Medicare utilization, you've got a check for $103,256 or something like that. So that $103,000 was sitting in an account, and then what would happen is whenever you had expenditures that were related to COVID-19, what you could do is use that to reimburse your operating account. What I would recommend that people do was write an invoice and say, okay, yeah, we purchased, $10,000 worth of PPE this month, and we were gonna take that from the provider relief fund. So and then draw down at that point. So that's the way we've recommended people do that. That fund does not have to be expended by 12/31. You actually have till June 30th of 2021 to spend all of the funds. So keep that in mind. If you still have funds available, you can draw that down up until June the 30th. You'll also have to report by July 31st. That'll be your final reporting deadline for any money that you spent in 2021. If you spend all of your money in 2020, you will not have to fool with doing this report next year. So you may want to, if you're getting close to spending all the money, maybe you want to try to find a way to spend all of your money in 2020 so you don't have to fool with doing this reporting next year. That would probably be a smart thing to do. So here's just, I'm a visual learner, as you can tell by all the stupid PowerPoints that we do. I'm very visual. So let's look here. So Friday, January the 15th, that's when your portal will open. So that'll be something nice to do on Friday evening. Instead of going out, you can go look at the portal. Your reporting deadline is February the 15th. That's a Monday. That's going to have to be done. So that'll be a nice weekend. We'll be wasted trying to figure out how to get all this information into this portal by February the 15th, 2021. June the 30th, 2021, you have to empty out that bank account. You're going to have to spend all of your funds by June the 30th, all of your provider relief funds. And then Saturday, July the 31st of 2021, you're going to have to report everything to CMS, to HHS at that time. So those are your deadlines. Here's just an FAQ, so you know I'm not making this up. Everything has to be spent by no later than June 30, 2021. What are you going to need to do? Well, that's the problem. The what keeps changing every time we turn around. September 19th, HHS released 6 pages of guidance, and everybody went nuts. Everybody started calling their congressman, the AHA, the National Rural Health Association, the NARHC. Everybody was upset because they were limiting the amount of money that you can keep to your margin. And that had never been mentioned before in anything. Basically, if you made more money in 2020 than in 2019, you were going to have to pay back any provider relief funds you received. And most of the money that you would have received would have been paid back to HHS under that guidance. That because everybody complained so loudly, the HHS came out on October 22nd and said, we're sorry, we didn't really mean it. We're going to change that lost revenue definition again. And so we're going to take out that margin piece of it. And I think they made a couple other changes to this as well. And so that what we thought was final, but it wasn't final. On November the 2nd, they changed the guidance one more time. And it's not completely changed yet. They're telling us that there's going to be another change to the guidance in the future. It just, they don't really have it all fleshed out yet. So look for coming attractions. This will change. This will not be your final rules. It's November 2nd, will not be your final rule. So, and then there, if you click here, that will give you the November 2nd final rule as of now. Here's what this document looks like. It's, like I said, it's 6 pages. here, so you can read through that. It's not the most riveting reading you'll ever have, but those are the 6 pages of the current guidance. This is the change, and I'll just read. This is from the RHC Monitor. HHS news clarification came from its response to an FAQ in which it said the healthcare related expenses are no longer netted against patient care lost revenue amount cited in the second portion. HHS indicated that the revised notice would be posted to remove the net of healthcare expenses language in the guidance. So as for now, we have no guidance regarding when this clarification will be put into place officially. Yet another moving target for auditors. So they are going to change it. They're going to change the language about net of healthcare related expenses. I don't really understand what they're telling me at this point, but we will, once they get the guidance out and we can sort of flesh through it, we will let you know. Here was the big difference in the September 19th lost revenue calculation and the October 22nd calculation as well. One is here they're talking about representing negative change from year to year operating from patient care related sources. Once revenue information is provided, cost impacts will be calculated based on calendar year comparison for 19. Okay, overall net patient operating income. That's what they were really looking at, representing a negative change in year to year, year over year net patient care operating income. That was your net income, and that was the problem that everybody had a problem with. Now they've changed it to year over year actual revenue from patient. This is net patient revenue. So this is much more favorable for us. So that was a good change. Here's our summary. We did a session with the Rural Health Association of Tennessee last week with Nathan Baugh, with Shannon Chamber, with Shannon. I didn't forget who was Scott Robbins and JC and Shannon Hayes. Haynes. I'm so old now, I forget everybody's name within 5 seconds. So here is reporting requirements and auditing summary. Here's a summary. It is confusing, it's changing, it's contradictory. That's why this thing is so hard and it changes so quickly. So you can see here's the different guidance here: September 19th, October 22nd, November 2nd. It just keeps on changing. Here is one thing that on the September 19th guidance that really confused us. It said that your expenses could be any expenses maintaining healthcare capacity. That's an extremely broad statement. That would almost mean any expense would be related to COVID-19. On the October 22nd guidance, they actually tightened that up a bit, and they said any direct incremental expenses not otherwise reimbursed. That is not quite so broad. That's going to really narrow the types of expenses that you can claim against these provider relief funds. So those are some of the things that we're dealing with here. October the 28th, this was very confusing. HHS released out a FAQ that said that as far as buying buildings and equipment and ventilators and all that, you could take a depreciation on those, but you couldn't take the actual expense. On November the 18th, HHS did release another FAQ saying, yes, capital expenditures, you can take the full amount for certain expenses. They didn't give you carte blanche on just building buildings and Taj Mahals and using the COVID-19 funds, but they did make it to where there's a lot of things. If say you're buying that refrigerator, you have to do the COVID-19 vaccine. That Pfizer one has to be stored at -94 degrees, and it costs 11 or 12 grand for a refrigerator to keep it at -94. Those sort of things you can purchase and use the whole 12,000 as a COVID-19 expense. So as of right now, we're back having capital expenditures as being an allowable expense. And we'll have some more detail on that as we go through. Again, the definitions of what these things are is ever changing, and even the definitions they give you are not very clear. I can say is even though the September 19th regulations would have most of you guys paying back most of your money in provider relief funds. The October 22nd funds are, the October 22nd rules are a little better. Probably some of you will still be paying back some of these funds. So unfortunately, especially with us rural health clinics that are really, really small, the ones that we tend to deal with, when you get $103,000 in your bank account, I mean, you've never seen anything like that. So we will probably end up having to pay back some of that money. So do keep good records of your expenditures and how you use your money. That's going to be extremely important, because the way, as of right now, the way I understand the HHS rules are, there's two, what they do is they have two different pots of money, your expenditures and your lost revenues. And whichever one of those is higher is what you can claim provider relief funds against. So it's not both of them. It's not an and, it's either or. So you want to keep really good records and try to get as much expenses as you possibly can. I'm afraid we're not going to have much lost revenue, because even though in March and April things went way down, every time I talk to about a provider now, they are working like crazy because of the spread of COVID is so great. I mean, their visit loads are going 40, 50, 60 visits a day from people that have COVID symptoms. So that is, I don't think it's going to be a whole lot of lost revenue is what I'm afraid of. So start working to gather your information now. And because these deadlines are super short, and if you're breaking things down by quarter, remember we're looking at 2019 is already gone. You can gather your expenses and your lost revenue information that you have to submit now. You don't have to wait till the end of the year to do that. You can actually do your quarterly stuff. You've got 3 quarters that have already done in 2020. So you basically can get everything done except for your 4th quarter 2020, add that to it, and then you'll be ready to submit by February the 15th, 2021. Also, if you're trying to add COVID expenses for time, for your salaries, you want to do time studies for that. I'm going to sneeze. Excuse me. So you want to do time studies as well. So keep that. Go ahead and do one of those now. You still have, 31 plus another. You still have basically 40 days before the end of the year. So try to do some time studies to see how much time your employees are doing directly related services related to COVID-19. And then there's the time frames. Again, they're unreasonably short for you guys to submit. Here's the FAQs that are out there. This is the 56-pager from HHS. You'll want to go in and look at that. And if you just click on here, make sure you get the latest version of this, because this thing continually is changing. So that is and go into that document and search through it. Typically what I will do is go in, and there's a search box in there where you can just search for the key terminology that you're looking for, because it's hard to find things in here. And so here's some of the things that are in there. What expenses or lost revenues are considered eligible for reimbursement? And if they're just listing out the types of expenses that you can look for, that you can claim as provider relief funding expenditures. And then here's the thing about capital expenses. They actually added this back. This was dated 11/18. This was the good news that we received this week regarding capital expenditures. Yes, you can get capital expenditures, but notice like I said, they don't give you the carte blanche here. They said if you're building a building, it's not the whole building, but if you've had to upgrade your heating and ventilation to support negative pressure units, if you're retrofitting a COVID-19 unit or doing something to enhance your ICU capacities, leasing equipment, leasing structures, those sort of things are allowable as well, but you just have to look through this very closely, make sure you're meeting these guidelines when you're claiming these expenses. And then they again, it's sort of contradictory again. It's like this here 11/18. The good news is you can use accrual or cash basis accounting. So that is good. And you can report depreciation as well. So if you've got other equipment that you're depreciating that relates to COVID-19, you can use that depreciation expense as well. So here is the CMS FAQs. Those are 150 pages long. The good news is there's a specific section related to rural health clinics there. I think it's around 64. There's about 7 or 8 pages of telehealth stuff in there. And then also on page 101, 102, there's some cost reporting information in there as well. So you don't have to read all 150 pages to get what you need. Let's go ahead and get into an example of how you can keep these provider relief funds. And let me tell you, when I said I regretted doing this webinar, I really regretted it. The last 2 or 3 days before, I had been listening to every webinar, every expert, and unfortunately, there are no experts in this particular area because all this stuff is brand new. This is the 1 in 100-year pandemic, and 1919 when the first one was. It seemed like I'm old enough to be around when that one happened, but I don't remember much about it. But there is a lot of confusion on these numbers, and I think I listened to 5 different webinars from 5 different experts, and it seemed like half of them said one thing and the other half of them said another because the reporting requirements are not clear. But here's one of the FAQs that we got, and so we're going to rely upon this one, and it says here, provider relief funds retained is the greater of lost revenue or direct incremental COVID expenses, not the sum of lost revenue. This is extremely, extremely important if this is true. And here's what the FAQ says within HHS 1028/2020 guidance, and I tried to find where the firm is quoting this. I could not find it. I looked and looked. Issued FAQs. The FAQ did clarify that provider relief fund payments retained is the greater of lost revenue or COVID-19 expense formula, not the sum of lost revenue and COVID-19 expenses. And when I going through the webinars, like I said, we looked at 5 of them. I think 3 of them had this terminology in there and used this method, and the other 2 added the COVID-19 expenses and the lost revenues together. So this will be something that we'll probably get a little bit more guidance in the future. But as of right now, I'm going to use the conservative approach and say, give you the answer that's the most conservative answer. And I wish it was a different answer. So in this case, let's just say we're a pediatric rural health clinic. I'm going to try to make the numbers where you can relate to them. So in May, you received that $103,000 distribution. I'm going to just use $100,000 to make the numbers simple here. So we put that money in a bank account, kept it separate, called it provider relief funds. And during the year, we had $75,000 worth of PPE. Maybe we rented a building. Maybe we put a mobile unit out where we did COVID patients away from everybody. But those expenses totaled $75 grand. We got one of those FEMA disaster loans or grants that they give, and it was about $11,000. So we actually had net unreimbursed COVID expenses of $64,000. These were direct and incremental COVID-19 expenses that we can easily claim. We'll create an invoice and pay that invoice from the provider relief funds. That's the way I did my PPP loan. Was I would have expenses that would qualify. I put it in a separate account. I would create an invoice, and then I would put that into my bank account for loan forgiveness. So same sort of principle applies here. So we had $64,000 of direct expenses. Now we're going to compute our lost revenues. In this case here, we have a small clinic, maybe have 1 physician, 1 nurse practitioner. Our net patient revenues, not gross, but our net patient revenues, basically your cash collections is what that number will tend to be. In a small rural health clinic was $900,000. And then that was in 2019. In 2020, we had a rough March and April, and our net patient revenues went way down. So we only had $800,000 for the full year was $800,000. We did receive some additional funding. Maybe the state gave out some type of funding for you guys. So So we added that money back in, the 50,000. So in this case here, our net patient revenues in 2020 was 850,000. It actually, we had lost revenues of $50,000 at this case. So how much money are we going to be able to draw down against our provider relief funds? 64,000. You take these two numbers, compare the 64 and the 50, whichever one is greater. 64,000 is greater. So we are going to take 64,000 out of the account, and we're going to have $36,000 sitting in our bank account of provider relief funds going into 2021 that we'll need to spend before June 30th. So that's the way that we understand the calculation to work as of now. Okay, let's go into 2021. We had 36 grand in the bank. We'd already spent a lot of money on COVID-19 direct and incremental expenses, so we only spent 20,000 in 2021. Unfortunately, and this looks like where things are going, COVID is hit just as harder than ever, and maybe we're in a lockdown again at the beginning of 2021, and our revenues actually go down. We're going to compare this to our 2019 revenues. So take those first two quarters in 2019, and we had $450,000 of 2019 revenues. Unfortunately, our 2021 net revenues dropped to 400,000. So we have lost revenues of 50,000. In this case, we're going to compare our 20 to our 50, and obviously our 50 is more, but we only have 36,000 left in our bank account. So we're going to apply a lost revenues of 36,000 to this, and we're going to empty out our bank account before June the 30th. So that's that's a good example as far as using up all your funds. Well, what's going to happen? Here's our next example where we actually have to pay back money. Keep our numbers the same. We have the same 36,000 in our bank account. We did end up spending $20,000 of incremental and COVID expenses in 2021. That's our 20 grand is still the same, but we didn't have a lockdown. Our patient revenues basically stayed the same as in 2019. They either increased or were the same, so we don't have any lost revenues. So 20,000 versus 0, we have 20,000. So that's the greater number. That's how much money we're going to pull out of this account, and we're going to have 16,000 left, which is what we're going to have to pay back to HHS in the future. So that's not the good example. That's the one where we have to actually pay back money. We don't know exactly how we're going to pay that money back yet. HHS said they're going to give us instructions in the future. And then they also came up with a HHS. This is a 1028 FAQ. They talk about expenses, basically figuring out what your average expenses are per office visit before pre-pandemic and now post-pandemic. And what it says here is if it costs you $5 more per visit, then you can include that expense in your incremental and direct COVID expenses and claim that as provider relief funds. But if your insurance company, that's an example 4, if your insurance company decides to pay you $5 per visit extra because of COVID-19, they're reimbursing you for that, then you are not going to have any additional expenses that you can claim against provider relief funds. So I would look at this example very closely and flesh this out and see if that will help you as well. You need to maintain your records. Like I said, keep good records. Maintain those records for at least 3 years is what you're gonna have to. Can you use this to support COVID-19 vaccine distribution? Yes. So as you're preparing to distribute COVID-19 vaccines, which we probably won't get any until the spring or summer, it may not even help us from that standpoint, because from what I've been hearing is healthcare workers, which is great, you guys will get it first, and hospitals will probably be getting it second, and rural health clinics are going to be down the food chain, and it will be probably late spring, early summer before we actually see much of the COVID-19 vaccines in our rural health clinics. Okay, here's some tools that will help you to accumulate information. Provider relief fund. This is an Excel spreadsheet that we came up with. Go ahead and start filling this out now, because again, you've got a really tight deadline. So you can start putting in, with the name of your clinic, your tax ID number, MPI number, your physical year end, and everything is done on a calendar year for this reporting. If there's not, even though your fiscal year end may be a June 30, doesn't matter for this reporting. Everything is done on a calendar year. So this is your demographic information, and then here's your expenses. If your aggregated expenses are, if your provider relief funds are less than 55, I'll talk. If your provider relief funds are less than 500,000, then you just have to put in one number in here. Just a summary number is all you need. So these are your revenue, these are your expenses, your general administrative expenses, and here is your health-related expenses related to Corona. Also, if you have more than 500,000 in aggregated payments, then you're gonna have to give a lot more detail. Where's the detail here? Right there. Here is the detail that you're gonna have to provide. HHS is right there. Okay. Also remember, if you have doctors that are making over 197,300, any money over that in salary, you cannot claim against these provider relief funds. So keep that in mind. You'll have to pull those expenses, that salary, out for doctors that make over 197,300. Here is basically just describing what types of expenses you can claim in these reports for provider relief funds. There's your G&A expenses. They're not clear on mortgage, if that means the entire payment, mortgage payment, or just the interest expense. That's an FAQ that has not been answered yet. So we're working on that one. There's the guidance on the 197,300 executive level pay, level 2 pay scale. Also remember, this is just the individual salary, not the fringe benefits. So you can still put your fringe benefits in there, the FICA taxes, all that sort of stuff. Just the basic salary that the person has. If it's over 197,300, you're gonna have to disallow the portion that's over that. Here's the detailed expenses that we talked about. Again, this is all an Excel spreadsheet that you guys can use. Lost revenues, what they want you to do is break down your revenues and by calendar year based upon payer mix. And so for 2019 and 2020, and I know from working with our rural health clinics and cost reports, this will be a little bit harder than it looks as well. So that may be a little bit complex. So you might probably need to get a hopefully you'll have a Zelia or somebody like that with a really good system to keep up with your payer mix and your payer collections per payer. And then here's your lost revenue calculations. Remember, these are done by quarter. So you get to go back in 2019, all this information here, we can fill out this information as of right now, all the way through September 2020. We have that available. So go ahead and start working on it now instead of waiting till the last second. And then, did you receive additional funding from different sources here, like the SBA, the PPP loan? You're going to have to put down any type of additional funding that you received. If you did receive business insurance, which apparently some people did get some of that. Then here is the non-financial information. Here's your FTEs by quarter. This is so annoying. Hopefully, where everybody's asking them, why do they need all this information? Can we do away with this? Because this is ridiculous. So they want your full-time, part-time, contract, any type of other, your patient visits, your telehealth visits, your inpatient visits, how many patients you admit to the hospital, how many resident patients, facility. This is for your hospitals here. Crazy amount of information they're asking us to provide for them. And then finally, if you've had a change of ownership during the year, that is going to be important that you report that information to them as well. Okay. That was hard. That was the second time. You thought I'd been able to do that better the second time around, but I think I ended up confusing myself just as much as I confused you. Cost reporting. Let's go through this really quickly, and remember, we're going to have a full 1 hour webinar coming up on December the 10th. The big thing is telehealth visits. Telehealth visits and cost is not included in the computation for the all-inclusive rate. So you're gonna have to keep up with those visits separately. You'll want to keep up, do a time study on your providers to see how much time they're spending doing telehealth visits, because we're going to lower their FTE. If right now they're a 1.0 FTE and they're spending 20% of their time doing telehealth, then on worksheet B, where they compute what's called productivity standards, we're not going to put a 1.0, we're going to put a 0.8, and that will lower the number of their number for their productivity standard. So keep that in mind, is you do need to do a time study on your physicians, on your nurse practitioners, on your PAs, on how much time they're doing telehealth. And Julie Quinn with HSA, she was very helpful with us at the beginning of COVID, and she still is put together a time study document in Excel. If you just click on here, you'll be able to pull up that time study document and use that to keep up with your visits. So telehealth visits going to be very important. Remember not to double count. One of the big problems we're going to have is a G2025 is the code for RHCs to bill Medicare for telehealth visits. What you want to do is, if you have a 99213 and you convert it into a G2025, you can see how in your system it could be double counting those. So always use that modifier 95 with your 99213s if you're doing it via telehealth. And even though that will get suppressed whenever the bill gets sent out, we will know internally, oh, that's a telehealth visit. We need to put that on it's not a part of the all-inclusive rate calculation. Also, your costs are going to be excluded from the cost report as a part of your all-inclusive rate. This is one of the big problems, and one of the things that we need to work with the National Association of Rural Health Clinics is they're trying to fight this, is you don't get your rate. You get $92.03 for your telehealth visits, which for independent RHC is actually more money than the cap. You actually make more money as doing telehealth visits as far as your rate goes than you do if you see them in person, which shows you how woefully poor your independent RHC cap is. It is way below your cost of $86.31. So it's a non-allowable expense. So we have to pull your expenses out related to telehealth. So we'll need to keep up with that so that any type of telehealth expense you have, we're going to be pulling that out of your cost report. Time study, we talked about that. And then cost, we talked about that. And then I'm also worried about the PSNR. When it comes out, how are they going to tell us how many telehealth visits that were paid by Medicare? How are your co-pays going to work whenever this gets on the cost report? Right now, Medicare is paying you guys inappropriately. They're actually taking the full. If you get paid, you will only get $92.03 no matter what your charge is the way it works. And they do a weird thing with the copay that we will describe to you when we do the cost reporting webinar. I'll show you what they're doing with that copay, and they're not paying it correctly. So we're trying to get that fixed. How is that going to actually flow through on the cost report? Because I think it's going to have an effect of maybe we'll get some money back on the cost report. So productivity standards, here is what I was talking to you guys about earlier. You're going to have lower volumes because of COVID, because of you guys having to shut down in March and April. As a rural health clinic, the way it normally works is if a physician works, there's 52 weeks in a year, you probably work 48 of them. It's 2,080 hours per year is what you normally get paid for from a normal employee standpoint. And that's what we use for your FTE calculation. So 2,080, if you only work, 80% of the time, then you're going to be a 0.80 FTE. So we want to make sure that we keep up with this very closely, because the telehealth is not going to count towards this 4,200 visits. Let me explain that again, because I started going in two different directions on that. What happens is, in a normal rural health clinic, in a normal year, is if you have a physician working full time, they need to see at least 4,200 visits. If you have a PA, they need to see 2,100 visits, and a full-time nurse practitioner should see at least 2,100 visits. The way the cost report works is you take your total expenses divided by your total visits, and if your total visits is more than these minimum productivity standards, then we're good to go. You take total expenses divided by total visits, and that gives your cost per visit. Where things go wrong is you have your total expenses and you have your total visits, but the minimum productivity standards are higher than your total visits. Let's say in this case here, we have one physician, one PA, one nurse practitioner. That number is 8,400 visits, and we only saw 6,000 visits during the year. Well, Medicare is going to use 8,400. So what's going to happen to your cost per visit? It's going to go straight down. It's going to be, so you can take your total expenses divided by 8,400 instead of your total expenses divided by 6,000. So a lot of you guys may be having productivity standard issues. And if you do, the MACs have been told to grant you guys waivers. They're requiring you to submit information to them in order to get this waiver approved. So if you think you're going to have productivity standard issues, let us know very early on. And different MACs have different forms and they have different timing that we have to do this. So let us know ahead of time. The key this year is going to be get your information in early and start working on this very early, because you have a February 15th deadline. You're also going to have a pretty early deadline on waivers that you're going to get from your MAC. So you want to get it to your cost report person as soon as possible in January, February as you can, so that if you do need a productivity standard waiver, you guys can get that as soon as possible. COVID-19 vaccines, when those come out and we do get our hands on them, they're going to put them on the cost report just like flu and pneumococcal. So that will probably be sometime in, like I said, the middle, early summer, late spring before we'll get our hands on that. So we still got a little bit of time to worry about that. They will have to change the cost report to accommodate that. And this is where Nathan Bond from the NARHC asked this question at the office call session a couple of weeks ago. And this is CMS is telling us, yes, this is the way they're going to do flu and pneumococcal vaccines. The good news is we do not have to offset your expenses. All these provider relief funds, we will not be, if you had that $103,000 worth of provider relief funds and you can use that, you're not going to be able to, you do not have to offset those expenses on your cost report. So that is great news. Let me see here. And then this one here, I thought this was interesting, is that this is from one of the HHS websites or FAQs. And what it says on here was, in cases where the ceiling applied to cost report and reimbursed amounts does not fully cover the actual cost due to unanticipated increases in providing care attributable to coronavirus, those incremental costs that were not reimbursed are eligible for reimbursement under the provider relief fund. What this tells me, as an independent RHC, we do about 200 of these cost reports every year. The cap is $86.31. Right now, and in 2019, the average cost was running, about $120 a visit. What we need to do is get these get your visit information into your cost report prepared early and your expense information in early. And let's take a look and see what your cost per visit is really soon. And what it looks like, if we can do this before February the 15th, is okay, our cost per visit was 120 in 2019. Our cost per visit is 140 this year. There may be a portion of this money that's not reimbursed to us that we can claim as provider relief funds. So I think that's extremely important for you independent RHCs where there is an unreasonably low cap. That $86.31 is basically fee for service that is unreasonable. And so this gives us sort of an out to where we can claim some of these expenses as a part of our provider relief fund. So I think that's extremely important and something we have to work on very early. Here's a crosswalk between the independent cost report and provider relief funds. The way, and if you've heard me talk about hospital rural health clinic cost reports in the past, basically lines 1 through 39. That's what I always I call it a traffic light. Lines 1 through 39. That's the green section. That's your healthcare costs. That's your salaries of your physicians, nurse practitioners, PAs, malpractice, medical supplies. Those sort of things are in lines 1 through 39. That would be considered medical expenses under provider relief funding. And then your facility and administrative costs, that's what I call it. That's the yellow section. That may or may not be allowable in computing your all-inclusive rate. That's for things like rent, accountants, consultants, utilities, telephone, that sort of thing, billing expenses. Those are lines 40 through 74. That's going to be your G&A. That's going to crosswalk into your G&A on your provider relief funding expenses. And then the red section, these are lines 76 through 90 of your independent cost report. These are things that are not reimbursable as under the all-inclusive rate. Things like your laboratory, you bill all of your laboratory or Medicare Part B, get paid fee for service for it. Your technical components, you're going to bill those out. Hospital services are billed on the 1500 if you're an independent RHC. Telehealth, line 79, is not a part of your all-inclusive rate. So those things, as far as a crosswalk goes, those could be going to medical, most likely medical, but they could be G&A. So you just sort of have to figure out what they're for. I would say probably 90% of the time, maybe 99% of the time, they're going to be going to medical is where they're going to be going to. A couple of miscellaneous items, and then we're going to give you back your time. And I think this is probably the third time I've done this session due to recording issues. So hopefully this one will work. Is this money going to be taxable, these provider relief funds? And the answer that the IRS gave us is yes, you are going to be taxed on these funds. We're going to probably have an issue if you have money still left over at the end of the year. That may be an issue for you if you can record it as income in 2021 versus 2020. You're going to get a 1099. If you receive that $103,000 check on May the 8th, you're going to get a 1099 for that this year. So you may want to talk to your accountants, your CPAs who are working on your tax return and say, listen, we got this 1099 for $103,000 on May the 8th, but we only qualify to keep $75,000 of it. We still have $25,000. That's a liability in 2021 that we need to liquidate. We're not going to use it till then. How will that work on the tax return? How do we need to report that to the IRS to let them know that, okay, yeah, we want to pay taxes on 75,000 of it, but the other 25,000, we don't want to pay taxes till 2021. That's something for the minds of a tax person and not me. So that's your question to them. The PPP loan came out, some guidance that came on November the 19th. This is our friends from Blue and Company up in Kentucky. And that just came out, I think, the day before the webinar, but it basically says if you use PPP loans to pay for salaries and it was forgiven, then you're going to need to reduce your expenses on your tax return. So it's basically going to be a taxable event to you. So again, another question for your tax person there, but that guidance just came out. You can tell what a horrible life us accountants live, because here these poor Blue and Company accountants are saying the much awaited guidance in the form of Revenue Procedure 2020-51. If that's what you're waiting for in life, you know, we do live a sad existence. So talk to your tax people about that one as well. But it looks like that PPP loan is going to end up in one form or fashion being a taxable event to you guys. If you were lucky enough to receive over $750,000 worth of provider relief funds, then you're going to have to do something called a single audit, and that's going to be very painful apparently. And so I don't know how to do a single audit. So you have to reach out to your accountants there and ask them if they do single audits. You have to be sort of a governmental accountant and really know those rules. So not all CPAs are going to be able to do that. But if you did receive this amount of money, you're going to be subject to this, and that's a discussion you need to have really soon with them so they can get set up to do your single audit. Okay. There's nobody here on Saturday morning to ask questions, so thank you guys for listening to this. I apologize for having issues on the recording. Hopefully this will be helpful to you. If you have any questions, please feel free to reach out to us and reach out to our sponsors. ChartSpan is chronic care management. That will add a really good revenue stream to your practice, and it's very helpful now, especially during COVID-19. And then, of course, Azalea Health, they really specialize in rural areas and rural health clinics, and do a great job with our clients there. So thank you very much. Everybody be safe. We're very appreciative of what you do. We're saddened that I know we've lost a few providers to COVID. We've had many get sick from COVID. And we just praise you for being the superheroes that you are, and we're extremely thankful. So thank you, and stay safe. Have a great Thanksgiving.